Hey everybody, welcome to the morning market briefing. Made it to Friday, Tom. How you feeling?
Oof. Well, we just got the PCE number in, so
Not
we'll
great.
get into that.
Well, yeah, we'll get to that in just a moment. It is Friday, February 24th, 2023. Hope you guys are doing well. Appreciate you guys for hanging with us. Lots of data coming through today. You want to jump to PCE? You got numbers?
We got numbers. So not great. Now we're getting revisions in too. So month over month, the PCE Deflator, which is the Fed's most preferred measure of inflation, was expected to come in at a increasing rate of 0.5% month over month, and that's up from the prior month of up 0.1%. We actually came in hot. We came in 0.6%. So hotter inflation, another dagger to the inflation is coming down rapidly narrative. But not only that, but they actually revised last month up from 0.1 to 0.2. So they doubled the increase of inflation last month, and then we're now up, another, call it 10.1% over the estimate for this month. And then the year over year number is at 5.4%. The expectation was 5.
That's a big miss.
That's a big miss. Not only that, but last month's reading was 5, and it has been revised up to 5.3. So not only did they increase last month, but they also increased this month, and it's higher than last month.
We got acceleration there.
Yeah, so we're seeing broad-based acceleration in the core PCE. Not great. So that's the read here. So sorry, I said the PCE deflator is 5.4. The core is 4.7, expectation 4.3. So no change there. It increases the exact same rate, but we're seeing a bloodbath on bonds now. The 10-year at 392. I would expect it probably to get closer to 4% by the end of the
call. Yeah, I'm seeing it at 393 now.
Yeah.
It's moving quick. A question for you, just from a theoretical level. I don't know that the average person, an average just general, somebody that maybe doesn't listen to the call every day, but that's somewhat in tune with markets, whether they're a client or not. I don't know if the average person observes the economy and measures inflation through the lens of PCE, but the Fed has kind of earmarked that as what they like to look at. Do you think there's any chance that they change their stance on, hey, this is what we're looking at?
I don't think so. I think that the narrative is definitely there that we're seeing it in every measure, right? CPI accelerated, PCE is accelerating. It's all about, they want to squash demand, right? And PCE is personal consumption. So it's how much money are people really spending? And so that's what we're really seeing here is an acceleration. And we saw the data with retail sales last week. We saw the data with CPI. We're seeing the jobs numbers continue to be strong. And now we're seeing the preferred measure accelerating month over month. And not only that, but the month before, which was considered a great month, we're seeing deceleration actually was revised up. And so I think it's going to be a while. And then you've had the Fed minutes on Wednesday where they said that they didn't see inflation coming down to the 2% goal into 2025. That's a long time out, specifically on the tail of them last year, thinking it would be at 2% by the end of 2021. So now the Fed has come around to reality, I think. The transitory, all these different buzzwords we talked about over the last 2 or 3 years. I think they've come around to say, this is the reality. The reality is we have high inflation. It's very sticky. It's going to take us a few years and high rates in order to knock it down, which was always the bluff that the market had, which is this is not going to go the way the Fed says it's going to go. And now the market has come around. And so now we're finally in alignment. And I think the narrative has changed quite a bit. And so I think high interest rates are here to stay. I think they're going to go higher. I would say that the reason they have to go high is because the market is strong, right? The jobs market is strong, spending is strong, demand is strong, the economy is strong. But that just means that the Fed has to do more work to bring it down to a C plus, right? We need the economy a C plus. We need inflation to be a C plus. We don't need both of them to be at an A plus right now.
So he's getting degrees, man.
Yeah, and that's how, we need everything to be pretty good all the time rather than exceptional, because strong growth equals strong inflation in the current environment. And so we need medium growth for medium inflation.
Yeah, they've got more work to do. I would expect work is going to start ticking up. What was it at 3.1?
Yeah, it was over three hikes yesterday, and now we're at 3.14 hikes. So with each passing day, we're starting to quietly move to a position where we might see 6%, if things continue to go the way they're going, which would be a very high terminal rate, above expectations that anyone had coming into this year. And that's great for long-term savers. It's going to be tough for valuations on stocks. I would imagine futures are going to react poorly to this news.
Yeah, I'm seeing a little bit of a lag. Futures were down. Dow futures were down 66 basis points, S&P 71, NASDAQ 90. I have a feeling we'll check back in on that. There's always a lag on day-to-days. I have a feeling we will see a little bit more pronounced red there by the time we wrap up the call. So we'll definitely come back to that. We do have other data coming through today. We don't have it yet, but we'll get new home sales expected to be at 620,000. I believe previous reading was 616,000. So we will get that data later on this morning, as well as the University of Michigan Sentiment Index expected to be essentially flat at a reading of 66.4. I'm very curious, I think, on that data, which again doesn't come out, I think, till maybe 10 a.m.
Yep, exactly.
I'm very curious to see the expectation sentiment there specifically. Current conditions has really led that index in terms of showing some robustness and some strength. That reading has been at 72.6. So that's people saying, hey, our current view of economic conditions is relatively favorable. The expectation has been a little bit more bleak. Last reading was at 62.3. Interested to see if we've seen any swing in that. This, I feel like, is often a lagging indicator in a lot of ways. Expectations on this survey would not include things like the PCE number that we just read. So it'll be interesting to see if there's an expectation for a little bit of improvement there. I wouldn't be surprised to see that come in higher than 62.5, but yeah. I don't know that necessarily leads to anything immediately actionable.
Yeah, because you're going to see all that feed through from what we saw early in the week, which is probably not going to be indicative of what we've seen in the last 48 hours. I'm sure they finished tabulating that sometime yesterday afternoon, and this is a tough number. Yeah. On top of that, they also put out a weekly 1 year and 5 to 10 year inflation expectation number, which we'll get as well at 10 o'clock, which they revised up significantly last week, which was in our market memo, which comes out in the afternoon on Fridays. I will be putting that together once we finish up this call, but that's going to be a big one too, because if the Fed says they're going to get to 2% by 2025, well, the University of Michigan thinks that inflation on the 5 to 10 year range is going to be 2.9%. So they're still above that. So we'll see if, over the next couple of weeks, as we get these readings from the University of Michigan, if that number comes down on the expectation that the Fed is going to continue to raise rates more aggressively, if they think that's going to change the long-term outlook on the 5 to 10 year inflation number or not, because that number has slowly been ticking up over the last couple of weeks as well. So that's a big number. Today's a really big one. This is going to be a volatile day, but I would say that, we've seen days like this over the last couple of weeks where we get some sort of bad piece of inflation news in the morning, rates pop, futures fall, and then we ultimately end up with a market up, because it is resilient. I think a lot of stocks have been revalued pretty aggressively over the last, call it 14 months, and there's definitely still value there. And I think there's going to be people coming in. So we'll see if we actually ultimately end up down. I think that there's probably a little bit of positivity that will creep back in sort of midday.
Yeah, I agree. Meanwhile, Google under fire. They've been essentially automatically deleting internal employee chats. The DOJ lawyers are saying that they're intentionally destroying internal corporate communications. They're asking for a judge to sanction the company. This is all kind of tied into the antitrust lawsuit that was filed a few weeks ago over their search engine business. Google has said, look, we've produced over 4 million documents in this case alone, and millions more to other regulators. It feels a lot like these lawyers are just setting the tone for how this antitrust thing's going to go.
Yeah.
I view it as overtly shady that Google's internal chat is periodically automatically deleted? Not really. I mean, even on my own iPhone, it's like text messages delete after 2 months just so I can save data.
Yeah.
That's
what are there laws that say you have to keep internal chats, for a certain period of time? I mean, there are for our industry.
But
emails.
I doubt there is for Google.
Yeah.
So it could be interesting to see. I think the biggest takeaway there is just kind of the tone with which the Department of Justice is trying to come after them. Meanwhile, Boeing taking a little bit of a break on the 787 Dreamliner and the deliveries tied there too. They've paused the delivery over a fuselage component and documentation issues. Not necessarily what you want to hear from Boeing, a company that's still trying to pull itself out from a pretty deep hole as it relates to public perception and maintenance.
I mean, they've just been on. I mean, Boeing has just been in a free fall since. I mean, really since I started in Narwhal. We had where was it? Somewhere in Africa, the crash, the original 737 MAX crash happened. I feel like about 2 weeks after I started in Narwhal, and Boeing has never recovered. They've just been embattled. The management team seems lost. I mean, this is just one more, big oopsie from the Boeing boys. So we'll keep an eye on it. It's not one we own widely, but man, I mean, they're the Wells Fargo of plane manufacturers. They just cannot figure out how to get out of their own way.
It's a tough spot to be in. I mean, you notice this when you follow these companies. You get into a spot where if you see a headline from Boeing, and Wells Fargo was certainly this way and still is to some extent, but was certainly this way for a long time. When you see a headline on Boeing, you just kind of know it's not going to be good.
Yeah.
Like they're just very much in that cycle. Meanwhile, Autodesk did report earnings. Earnings per share came in at $1.86. Expectation was for $1.81. But overall, I think the big story with this stock, it's down about 4.5%. The big concern here is really on the guidance side. For the full year, they said they expect revenue in the 5.36 to 5.46 billion range. The previous expectation was for that high end, the very top end of that range, which implies not a whole lot of growth, not the growth people were expecting from this company. Earnings per share coming in somewhere between 6.98 and 7.32 for the year. Previous expectation was 7.33. They're getting hit for this. I do wonder if this is a bit of an opportunity. This is a company that's making software and essentially design software for all kinds of different contractors. I do wonder if this is a bit of a soft guide, potentially to manage some expectations. This is a company that's it's certainly growth oriented as a technology company, but it's performed very, very well. I mean, it was up 18% in the first 6 weeks of this year. One of the few companies that's actually up over the last 12 months. It's done very, very well, walking back, 5%, call it. It's not necessarily hugely detrimental, but I wonder if some of this is a bit of expectation management.
Yeah, I think that, based on, all the notes we have internally, and Ben, I know, sat in on the call last night for the earnings call. It seems to be that they've really flubbed the transition from, I would say they're probably like 10 years behind on this, but they're transitioning from a one-time or annual fee to use their software to a subscription service like everyone else has over the last, it seems like forever, the subscription model. I mean, even Microsoft Office does it. And they can't figure out how to get the balance sheet correct. They can't figure out how to message the fact that instead of getting big chunks of money all the time, they're getting little chunks of money on a regular basis from these companies. And it seems like their free cash flow numbers always seem terrible. They can't figure out how to manage that cash flow now that it's incremental instead of all at once. It just seems like management can't figure out the finance side. Ben, in his notes, put that their number one priority for Autodesk is to fire their CFO. Otherwise, they have an unbelievable product. It sells. They make a ton of money. The problem is they just can't seem to get the numbers right, the guidance right, the understanding for the analysts correct. It's just a fiasco from the financial side in terms of their messaging. Yeah. But otherwise, if you look at the numbers are great.
This is a company that should do well. And it may be that there's a need for a change in the CFO spot. I know we have a corporate client, and some of the individuals are clients as well. That's a very, very large contractor that does billions of dollars a year in revenue. They love Autodesk. They last year converted to kind of their cloud system for employee onboarding and everything. And talking with folks like that, the gates are wide open in terms of not only the number of projects, but the size of these projects that company is pursuing and closing and building. I think it's going to be quite interesting to see how you gel a disappointing financial season with an industry that seems to be still performing quite well and still highly dependent on your products.
Yeah.
There's a degree of back office mismanagement there.
Yeah.
Something's got to give. It may very well be the CFO, but the messaging is hurting the stock in the short term. May create some opportunities to accumulate positions. I'm not totally sure. Kind of want to dig in a little more, but will be interesting to see kind of how that plays out over the mid to long term, I would say. Checking back in on futures, let's see. Yeah, so we've seen a little bit more of a decline. S&P futures down 1.1, Dow futures down about 1.5. Everything's down about 0.5%, kind of from where it was on the equity side. Looking at the rates, I'm now seeing the 10-year to 3.94. You may be seeing something a little bit more precise, but definitely seeing some tick up there on the U.S. 10-year.
Yeah, we're red across the board. Every step of the bond or the yield curve is off today. So we'll be buying some bonds.
Good day to buy bonds. We'll wrap it up there. We will be back Monday morning at 8:30. Ben is running a half marathon on Sunday afternoon in Las Vegas, and then he's getting on a plane and flying back, which seems like a horrible personal decision. I don't know if Ben joined us on the call, but I think a lot of people have had bad flights back from Las Vegas. I don't know if anybody can really relate to the red eye after running a half marathon.
Yeah, because I think it starts at like 5 o'clock in the afternoon there. So it's like he'll run it, say he finishes in an hour, he'll shower and get to the airport and immediately get on a plane and then arrive here fresh for the morning call.
So yeah, it could be an all-time call, I feel like.
Yeah, he's going to be so tired.
Ben's going to be worse for the wear. So we'll have him back Monday, though. Hope you guys have a great weekend, and we'll talk to you soon.